RSI hits 70, so it's overbought and you should sell. RSI hits 30, so it's oversold and you should buy. That's what most people are taught, and it's one of the quickest ways to lose money in trading. I'm Isiah from the Investor Center. This is episode 3 of our indicator series. RSI does something completely different. It measures momentum. Here's what that actually means. RSI stands for Relative Strength Index. It was developed by a technical analyst called J. Wells Wilder back in 1978, and it's been one of the most widely used indicators ever since. What it does is compare the size of recent gains to the size of recent losses over a set period. By default, 14 candles. It then plots the results as a single line on a scale from 0 to 100. If price has been closing higher more often and by larger amounts, RSI moves up. If price has been closing lower more often and by larger amounts, RSI moves down. It's measuring the strength and speed of price movement, not direction on its own, but how aggressively the market is pushing one way. On most platforms, RSI appears as a line in a separate panel below the price chart, moving between 0 and 100. There are two key levels marked by default, 70 and 30. When RSI is above 70, the market is considered overbought, meaning recent gains have been strong and sustained. When it's below 30, the market is considered oversold, meaning recent losses have been dominant. The area around 50 is essentially neutral. RSI sitting around 50 tells you there's no clear momentum in either direction. The market is balanced between buyers and sellers. One thing worth noting, the speed at which RSI moves matters just as much as the level itself. A slow drift above 70 tells a different story to a sharp spike. Both are above the same line, but the character of the move is completely different. And this is the bit that trips most people up. Overbought does not mean about to go down. Oversold does not mean about to go up. In a strong trend, RSI can stay above 70 or below 30 for a long time. If a currency pair is in a sustained uptrend, RSI might sit at 75 or 80 for days or even weeks. Treating that as an automatic sell signal is how a lot of beginners end up fighting a trend that has no intention of reversing. All RSI is telling you at those levels is that momentum has been strong in one direction. Whether that momentum continues or fades, RSI alone cannot tell you that, which is exactly why most traders use it alongside other tools rather than in isolation. If this series is helping you make sense of the charts, subscribing genuinely helps us keep making these videos. Let us know down in the comments which indicator you want us to cover next. I'm Isiah from the Investor Center. We'll see you in the next one.